Good morning, degenerates, and welcome to another episode of Boring Crypto I.O., the place where I read you the boring crypto news every morning, Monday through Friday, just so you don't have to. My name is Not Important, and I'm your host, Friday. Let's go. Federal Reserve's banking bailouts reach a new weekly high of $103 billion. But don't forget, they're here for the little guy. U.S. House Committee chairs Blockchain Association turn up heat on SEC head Gensler. That dude is hopefully Dunskies. And last but not least, Coinbase seeks dismissal of SEC suit, claims extraordinary abuse of process. Obviously. Onto the market. Current market cap, $1.2 trillion. Bitcoin ticking up in the percentage. 50.1% dominance for Bitcoin. Ethum's at 19.0, and gas is up. 30 Gwei will get you an ETH transaction. Makes me wonder what's going on with ETH. Maybe some new NFT scam that everyone and their mom is buying. Current market right now is looking still a little sideways. Bitcoin's moving a little bit. We're going to look at that per usual. And yeah, we're kind of turning into the green. Might be a green day. XRP up 2.17. Cardano making some moves. 6.53% up on the day. Dogecoin 4.13. Solana 5. Litecoin pumping 18.36. So on and so forth. Bitcoin. What in the shit is going? Like, what kind of nasty pump and dump garbage is going on with Bitcoin Cash right now? Up 115% on the week today. 27.65. I can't do it unless I saw something on the charts that told me that Bitcoin Cash was going to move. Like that is not a long-term buy bag building thing for me. People chasing green candles? I don't know. Stellar 11.37, 29.3 on the week. ETH, all these old garbage forks, man. ETH Classic 13.48, 22.37 for the week. Yeah, whatever. We're gonna call this the green day, guys. VeChain finally waking up. 5.04 on the day. 8.34 for the week. Anything else big? Aave 9.87. 10% for EOS. Satoshi's Vision. This has got to be strategic. This is on purpose. Something's happening. Like, people are pumping all these old, dead forks of Bitcoin and Ethereum. Maker up 14.11. Holy shnikes. eCash. What is eCash? I've never even heard of eCash. Look at this pump. 55% on the day. Pepe's moving. Zcash 11.85. I'm kind of continuing to go down because there's some big moves today, guys. Compound, don't know what it is. 21.9, 90% on the week. Dash. Is Dash still a project? 11.62, 13.79. I have been looking at Dash since 2017, and I haven't done any research on it anymore to see if it's even still a thing. It is interesting to see it moving so significantly. Outside of that, Zilliqa 7.7. Yeah, guys, whatever. We're gonna call this a green day. We might get this the next alt season that we've been waiting for so long. It's looking that way, especially with these old fork projects pumping. It's very, very intriguing. All right, on to Bitcoin. Well, looks like we broke out, guys. I don't remember this yet. I don't remember when I showed you guys these patterns. It was yesterday, day before. Everything starts to blur, but I showed you this ascending triangle that on the 12-hour, this is potentially a fake out that we kept bumping our heads on. We traced, came back up and broke out. Now, again, Actually, Satoshi Stacker was who I saw this descending wedge, descending channel. I got that idea from him. And as of last night, that broke out here. We actually, believe it or not, we pumped all the way up to 31.3, we'll call it. And it retraced and came back down, and then actually was fighting up inside. Well, here, let's go to the 1 hour to show you what kind of price action was going on with this. So we were beating our heads at the top of my ascending triangle, came back down into the channel, bounced off the bottom of that triangle again, and it came back up. So both of these patterns are technically in play, right? I wouldn't say either one or the other was or was not in play. They both could have been good plays. You could have front run my triangle with Satoshi's God, I can't talk. Descending channel, descending wedge, and then we had this war in between. God, what is this? The 30,007 and 30,008 level. After this giant breakout and a retest, but now we're getting back into it. So this is basically a retest at the top of my triangle, the ascending triangle, and then now we're taking off. So we are now at 31,050. Keep your guys' eye on that. See where we're gonna go. Again, I believe we need some significant high time frame closes above this 30,800 level for any of this to hold. Outside of that, let me back out a little bit and see what we might be looking at. Again, keep your eye on 31,284 for a potential pullback. Again, we had it here. We couldn't get past it here and hold. So that's what I'd be looking for basically a measured move of this breakout. Okay. 8 hour. Actually, let's just go to, let's open it up here. See what kind of support and resistance we got going on back here. Okay. Right here, be some resistance. That's all I'm really seeing until the giant cascade. So here's what's crazy though, right? So when you really back out in short of time frames, we're fighting all of this. All of this is what we're still fighting. Now here, okay, so here's some food for thought. If we get it past this 31,795 and 33, there's a huge, I mean, going into 33, whatever, there's a huge potential because of this very, very low volume node right here that we could just run. Absolutely run our butts off because there's not a lot of volume in this area. That's why we fell so hard, so fast. On the shorter time frames, I'm sure there's some stuff going on there, but on the bigger time frames, there's a large potential that if we get into this area, this 33 to 37, that we could just run. There you are. That's what I'm looking for. Look at this. That is a very, very low volume node on the 4 hour. Definitely something to think about, guys. God, my charts are disgusting. Just being honest, man. So, yeah, this whole thing is setting up to be a big triangle. And that's what I was looking at on the 8 hour. So like I was saying, this is on the 4 hour. This is this giant flag, giant ascending triangle that I originally saw. And then there's Satoshi's in purple, descending channel. Either way, they have both broken out. Keep an eye for this 31,795. 31.4 to 31,795 as potential pullback. Or we might break back into the pattern. Keep your guys' eye on that. But right now, we are broken out. Let's see what happens. All right, guys, moving on to the news, and we'll get you out of here. Federal Reserve's banking bailouts reach a new weekly high of $103 billion. Guys, this is their way of printing money without saying they're printing money. If you haven't figured this out yet, I don't know what to tell you. They're still printing money. They're printing money and sending it to Ukraine. They're printing money to bail out these big banks. And they're just devaluing the dollar. Awesome. Pump Bitcoin. I'm over it. The Fed's emergency loan facility has reached new highs as embattled banks are needing a central bank bailout. We suck. We did zero reserve banking and we lost all the money. Now, please use taxpayers' money to bail us out so we don't fail. Thank you. United States Federal Reserve's emergency fund for embattled. What is embattled? Like that, the terms they use now to try and church shit up. Embattled banks has seen its highest level of distressed asset redemption since its inception 3 months ago. And we're up to $103 billion. Oh, we're screwed, guys. The emergency lending program, known as the Bank Term Funding Program, the BTFP, was introduced in March amid the United States banking crisis, which saw the collapse of Silicon Valley Bank, among others. The fund essentially is aimed at backstopping banks and other depository firms. According to data from Federal Reserve Bank of St. Louis, the Fed's Bank Term Funding Program has reached a record level of $103.08 billion in loans for the week ending in June 28th. And I hate to break this to you guys, but they're saying these are loans. None of these banks are going to pay this shit back. I'm sorry. Don't. You can fight me on it. You can argue. They aren't going to pay this back, and they don't plan to. And the Fed knows this. It's kind of on purpose at this point. Moving on, the milestone figures means that the Fed is still bailing out banks despite its attempts to reassure investors that the banking crisis is over. It's not. Market analysis John Consorti also opinioned on the latest figures, claiming that the Fed's shadow liquidity is propping up risk-taking behavior across markets. This may encourage investors to take large risks as evidenced by increases in stock markets such as the S&P 500, he said. In my honest opinion, the Fed will definitely have to create a new facility to buy distressed CRE loans and maybe even CMBS, said Consorti, referring to commercial real estate and commercial mortgage-backed securities. Guys, commercial mortgage-backed securities, 2008. Look it up. According to Reuters, U.S. banking regulators have been asking lenders to work with creditworthy borrowers that are facing stress as commercial real estate lending remains under pressure. Furthermore, the BTFP peak has come in the same week that the Federal Reserve announced its banking stress test results, passing the top 23 lenders in the country. American banks are not the only ones in trouble. According to a Bloomberg report earlier this week, Germany's Bundesbank may need a bailout for losses on bonds acquired as part of the European Central Bank asset purchase programs. The Telegraph reported that it is a wider problem, as after trillions of dollars of such central bank money printing worldwide, the chickens are coming home to roost, with banks drowning in debts amid rising interest rates. Yep. And they're going to bail them out. As opposed to letting them fail, they're going to continue to prop up the market, devalue your money, and bail out these fucking banks. Excuse my language. And act like it's what needs to be done. We just have to do it. No, you don't. The system is trash. And you know it. And we're starting to see it. And you're going to continue to line your pockets, devalue the money, and make up excuses. Pay attention. That's all I can say. Moving on. U.S. House Committee Chairs Blockchain Association turn up heat on SEC head Gensler. 3 House chairs sent a letter regarding record keeping, and FOIA and the industry advocacy group suggested Wells notice recipients ask for his recusal from their cases. 3 committee chairs in the United States House of Representatives have sent a letter to U.S. Securities and Exchange Commission Chair Gary Gensler demanding a more satisfactory response to their November 1st letter regarding the SEC chairman's and the agency's compliance with record-keeping requirements. Judiciary Committee Chair Jim Jordan JCCJJ. Oversight Committee Chair James Comer and Financial Services Committee Chair Patrick McHenry stated that the response they received from Gensler to their inquiry did not address the direct requests made in their letter. Specifically, they asked for certification that the SEC follows federal record-keeping and transparency rules, and that Gensler and his subordinates have not used private email accounts to conduct official business, as well as explanations of the agency's definition and use of off-channel communications. The Congresspeople, along with is that Republican or Representative? I never know. Rep. Tom Emmer were responding to a Wall Street Journal report criticizing the SEC and other agencies for shoddy record keeping. Government officials routinely engage in the same sort of record keeping shenanigans for which Wall Street groups were recently fined by the SEC. The report concluded. Specifically, the article noted that the use of chats by officials for government business, which are not searched to fulfill subsequent Freedom of Information Act requests. This is kind of a nothing burger. The new letter reiterates the original request and adds, if you do not intend to comply with any or all of the above requests, number 1 through 5, describe the factual and legal basis for your non-compliance. The letter dated June 28 cited inconsistencies in Gensler's publicly accessible meeting schedules in 2021. Crypto is mentioned. Gensler was the object of specifically crypto-related criticism the following day when the Blockchain Association released a paper arguing that Gensler should recuse himself from digital asset enforcement decisions, the paper claimed. In the digital asset space, the SEC has all but abandoned its role as a rulemaking body. Key issues of existential importance to the digital asset industry remain unresolved. Chief among them, the question of whatever and when a digital asset represents a security. Some of these things read very weird to me. Maybe I'm just weird. I don't know. Gensler has clearly stated his view that all digital assets other than Bitcoin are unregistered securities, except for when he's under testimony by Congress and asked about Ethereum. And all digital assets trading platforms are unregistered security exchanges. The paper said, citing numerous statements made by the SEC chairman, those statements show that Gensler has prejudged everything other than Bitcoin. It continued, and due process requires not only that the agency decision makers act without bias, but also that they avoid even the appearance of bias. Wells notice recipients can seek Gensler's recusal through the SEC or in federal courts, the paper reminded. Dude, this guy's got to be done. The fact that he's even still there is insane. Which makes me think it's all not orchestrated, but it's all this back and forth is just theater, possibly. But I don't know, who am I? I'm just some guy in a bedroom yelling into a microphone to nobody on YouTube. Last but not least, Coinbase seeks dismissal of SEC suit, claims extraordinary abuse of process. The motion to dismiss argues that even if all allegations in the lawsuit are true, the plaintiff does not have a valid legal claim. In the ongoing legal battle between Coinbase and the United States Securities and Exchange Commission, the American Cryptocurrency Exchange has filed a motion to dismiss the SEC complaint. In a legal document filed on Thursday, June 29th, with the U.S. District of Court for the Southern District of New York, Coinbase raised concerns about the SEC's interpretation of securities laws, suggesting the agency was reaching beyond its legal authority. This move underscores Coinbase's determination to challenge the SEC's lawsuit. The motion to dismiss argues that even if all allegations in the lawsuit are true, the plaintiff does not have a valid legal claim. Coinbase's legal team stated in the filing, even if the SEC were correct that the assets and services it identifies are within the scope of its existing regulatory authority, the legal action must be dismissed on independent grounds that it violates Coinbase's due process rights and constitutes an extraordinary abuse of process. The SEC lawsuit alleged that Coinbase has facilitated unregistered trading in 12 digital tokens that were deemed securities. The company has contested this claim and argued that the SEC was applying securities laws to certain digital tokens in ways that significantly deviate from existing legal frameworks. Paul Grewal, chief legal officer of Coinbase, tweeted on June 29th, saying that the SEC's claim go far beyond existing law and should therefore be dismissed. The SEC's definition of securities includes investment contracts, which have been interpreted by the Supreme Court in the Howey test to include transactions where individuals invest money in a common enterprise and expect profits primarily from the efforts of others. In its suit, the SEC named 12 crypto tokens as securities. We know what they are. There they are. I'm not going to read them all. The exchange's lawyers further argued that in 2021, the SEC declared Coinbase's registration statement with the commission effective, thereby permitting the company to sell its shares to investors when it went public. The approval followed an extensive review process that spanned several months and involved in-depth discussions with Coinbase. This allowed Coinbase to trade more than 240 tokens on its spot exchange, including 6 of the 12 tokens now under dispute. Well, we'll see what happens. But guys, that's all I've got today. It's Friday. You know what that means. Weekends are heavily volatile. There's a potential that we could drop to the floor or run to the moon. I don't know. I'm not that smart. But we are sitting right at 31,000 while I end this video. Yeah, that's all I got for you guys today. So, with that being said, if you guys enjoy the content I provide for you here every morning on Boring Crypto IO, please by all means subscribe to the channel, turn on the bell for notifications, watch the videos, like the videos, please share all of the videos on all of your social platforms, and get out there and enjoy your weekend. Get away from the screens, get away from the charts, go touch some grass, go hang out with your family maybe. And I'll see you guys bright and early Monday morning. I am out of here.